Welcome to today's news highlights. Tonight we bring you a story that is making waves across the globe. Tonight we're diving into a story that could reshape the global landscape. The financial world is abuzz with talks of a brewing currency war. President Trump has warned the Brics nations, Brazil, Russia, India, China and South Africa, against challenging the dominance of the US dollar. This bold move has sent shockwaves through international markets. His weapon of choice? A full-blown 100% tariff on their exports to the United States. This aggressive stance aims to protect American economic interests. Will the Brics nations back down, or will this escalate into a full-blown trade war? The stakes are high and the world is watching closely. Stay with us as we continue to monitor this developing story and bring you the latest updates. President Trump's warning to the Brics nations is blunt and consequential. He has issued a stark ultimatum that could reshape global trade dynamics. He's made it clear that any move towards a new trading currency will be met with severe economic retaliation. This includes imposing stringent tariffs and sanctions. The dollar is the world's reserve currency, giving the US enormous leverage. This dominance allows the US to influence global financial markets significantly. A 100% tariff on Brics goods could trigger retaliatory measures. Such actions could escalate into a full-blown trade war and disrupt global supply chains. The ripple effects could be felt worldwide, affecting everything from manufacturing to consumer goods. Adding fuel to the fire is the plight of the Chinese yuan, recently hitting a two-year low against the US dollar. This decline has raised concerns among investors and policymakers alike, as the weakening yuan could lead to capital outflows and increased financial instability. The Chinese economy faces internal issues like a property market crisis and rising debt levels. The property sector, once a pillar of growth, is now struggling with defaults and unfinished projects causing widespread economic anxiety. Externally, the US Federal Reserve's interest rate hikes have made the dollar more attractive, weakening the yuan. This has put additional pressure on the Chinese currency, making imports more expensive and complicating trade dynamics. Beijing faces a difficult balancing act, stabilizing their currency without derailing economic recovery. The government must navigate these turbulent waters carefully to maintain economic stability and investor confidence. The Brics alliance has recently welcomed Iran and the UAE, raising eyebrows in Washington. Central to their ambition is the idea of a common Brics currency gaining traction recently. Reducing reliance on the US dollar could shield these economies from pressure tactics. However, economic disparity and political differences among Brics nations make this a challenging goal. President Trump's aggressive tariff tactics have also targeted Mexico, a crucial trading partner. Trump's threats to impose tariffs on Mexican goods raised concerns about US-Mexico relations. However, the tariffs were put on hold after a deal with Mexican President Andrés Manuel López Obrador. While the immediate crisis is averted, underlying tensions over trade, immigration, and border security persist. The escalating trade tensions and potential currency war have investors on edge. Stock markets have been volatile, with shares in companies reliant on international trade taking a hit. The fear is that Trump's tariff threats could disrupt global supply chains, increase prices, and stifle economic growth. These developments highlight the interconnectedness of global politics, economics, and currency dynamics. President Trump's gamble that economic pain will bring the Brics nations to heel is risky. Stay tuned for more updates.